Hello and welcome to the Stansberry Investor Hour. I'm Dan Ferris. I'm the editor of Extreme Value and the Ferris Report, both published by Stansberry Research.
And I'm Corey McLaughlin, editor of the Stansberry Daily Digest. Today we talk with Marc Chaikin, the founder of Chaikin Analytics.
Marc is a frequent guest of the show, and you will find out why. It's for a very good reason. Get out your pens and pencils, get ready to take notes, get ready to write down ticker symbols and to learn something about investing. So let's do it. Let's talk with Marc Chaikin. Let's do it right now. Marc, welcome back to the show. Always a pleasure.
Dan, good to be with you.
So what? Where do we ever start? You're well known to our listeners, and we talk to you fairly often. I think you're one of our most frequent guests. 2 or 3 times a year. I always wonder, what is Marc thinking now? And I get some emails from you, and I get emails about when the next market crash will happen, and I think, what is this all about? Maybe I should just ask you what's on your mind, where you'd like to start. How would you like that?
Well, let's put the crash scenario on the back burner. That is based on historical patterns that talk about the second year of a presidential term. And 65% of all bear markets start in that year because the chickens sort of come home to roost based on the new policies that were implemented in year one, which we're going through right now in terms of tariffs and interest rates. But there's still some massive opportunities in front of us, in my opinion, into year end and probably into first quarter earnings reports back, next April. So right now I am bullish. I was looking for some volatility and downward price movement in September, typical of seasonal patterns, right, into an October low. But so far, the prospect of a 25 or 50 basis point cut by the Fed has kept the market on sure footing.
Yeah, that cut thing it's a little strange, isn't it? Because certainly in major cutting cycles have tended to overwhelmingly to correlate with recessions and declining markets. But we don't have that expectation anymore. They've beaten that out of us, haven't they?
They have, but I just read a study this morning. There have been 7 rate cuts since the Fed started announcing their policies at a FOMC meeting in roughly 1992. There have been 7 rate cuts within 40 days of a new high in the S&P. So it's happened before. It basically just helps overheat an already good economy.
Mm-hmm. Yeah, I'm not saying it's not a reason to be bullish. It really throws some gasoline on the fire for sure.
Definitely. But I think the key is to note that this isn't a one-off outlier. This has happened before. And, the employment numbers, I guess, are troubling for the Fed. And with this inflation number that came out, PPI on Wednesday, down instead of up, there's some cause for celebration and, at the FOMC meeting next week.
Right. I noticed I was looking, I was thinking about with its sort of three cut cycle from late last year, the long end of the curve didn't really like it, right? And I noticed the 10-year is still slightly above where it was before that. It's like 4.1 or something maybe as we speak, and it was 3.6 at the beginning of that cutting, and the market clearly didn't like it. It was almost 5% at one point. But I also noticed that mortgage rates have come down more than the 10-year. Like the mortgage, the bank rate average 30-year fixed, right? National average. And that, of course, bodes well, right? If we get, I continue to believe if we get a 5 handle on mortgages, man, you're going to see some action.
You certainly will. In fact, the Chaikin Power Gauge rating, which, as you know, is a quantitative model with 20 factors, it's mostly fundamental and a little bit technical, has turned bullish on the home builders and stocks like D.R. Horton specifically. It's interesting if the Fed does what they normally do, which is to go into an interest rate cutting regime with the idea of cutting at almost every meeting. We could see a 150 basis point drop in the Fed funds rate, by June of next year. And there are two industry groups that benefit from lower interest rates big time: housing and biotech. And both those groups have broken out of long base periods recently and are established uptrends that are pretty impressive.
And I want you to know my agreement with you on these matters, Mark, has nothing to do with my position in SOFR futures options. Nothing whatsoever. Just totally.
Well, but
academic.
you raise a good point, Dan. You raise a good point. There's a group, quote unquote, of bond traders that are known as the bond vigilantes.
Oh, yes.
And they operate mostly at the long end and on the 30-year bond. And that's going to be the big conundrum for Scott Bessent, Secretary of the Treasury, and for whoever is controlling the Fed, come December. 30-year bond yields are going to stay stubbornly high, in my opinion, because the bond vigilantes don't like super stimulation into an already strong economy. So the question is, how does the Treasury handle that? And there's all sorts of mechanisms that are above my pay grade for issuance and buying bonds that they can do to try and push down the 30-year yield. But it's pretty tough to manipulate the bond traders. I mean, not manipulate, but to influence them when they think something should be different.
Yeah, that part, I agree. That end of the market, like, we all know what happened on April 8th, right? Trump said it out loud in public without any, he said, I looked at the bond market and it was scary. And then, of course, he backed off, and that was like the tariff tantrum bottom. So we know this is real. And I've written about that. I did a whole issue of my newsletter about this, about how the bond market scared the crap out of, I guess it was Clinton and then Obama. They have all had their run-ins with the vigilantes, and he's no different. But I agree, a lot of the stuff is above my pay grade. But we know one thing they do is issue a ton of on the short end, issue a ton of T-bills. Like that's one of the big repeat arrows in the quiver. Well, okay, I guess we need more T-bills and less 30-year, right? So they'll do that because they can.
But here's the irony. Here's the irony, Dan. Part of the game plan coming out of the White House and the Treasury is to lower the long end of the yield curve so that the cost of servicing the U.S. debt goes down. But if the 30-year stays where it is, that's not going to happen. Yeah, as I said, that's why I look at the power gauge and the technicals, because even if I knew what was going to happen, I would probably make the wrong call in terms of what to do about it. So the bond market's its own animal, and we'll see how that plays out. But that could create, after the Fed decision on the 17th of September, what happens at the long end of the curve could create a little bit of a 5% pullback that I've been looking for, and so far hasn't come.
Right, and especially in September, right? That's the time to expect it. The worst month of the year, right?
Exactly.
So, I'm right there with you on that one.
I'm interested because last September, when the Fed cut, their first cut was 50 basis points, I think the first of 3, and all the long-term yields went higher. They were heading lower into that meeting, and then when they actually made the decision, everything went higher, including mortgage rates. This time around, like Dan said, the mortgage rates are going lower right now, and the longer-term yields are headed lower too, like slightly lower from where they were. But what happens after, I guess, and then like, how do they signal like if more rate cuts are coming? I guess that.
Well, signal is an interesting word, because the Fed is now in a blackout period ahead of the FOMC meeting on the 16th, 17th. And there's a reporter for Bloomberg or the Wall Street Journal, but he has a Greek name, and he's known as the Fed Whisperer. Yeah. So right now, 25 basis point cut is like guaranteed. But the Fed futures market is now 50-50 that we'll get a 50 basis point cut. But the Fed typically won't do that unless they've tipped their hand. So we have to look for this reporter, the Fed whisperer, probably after the CPI report and the unemployment numbers on Friday. You may get a tip off as to whether it's going to be 50 or just stick at 25. Who's the guy, Dan? I see you Googling.
Yeah, Nick Timiraos.
Nick,
or Timiraos.
Yeah.
Yep.
Yeah. And it's amazing that in this era of electronic communication, someone picks up the phone and says, hey, maybe you want to be bullish on rate cuts here.
Right.
But that's the way the game is played. So how do we make money for the subscribers to your podcast?
Well, it sounds like we get long, and if we hit this nice pullback in September, we really, we're buying that dip for sure.
I am. The question is, what are you buying?
Well, I'm buying the same sorts of, cash gushing businesses that have good balance sheets and managements and all the rest of it in extreme value. And I'm doing something completely different. I'm running a what I would call a truly diversified portfolio in the Farish report. But we all want to know what you're buying, Mark. That's why you're here.
Yeah, what is the power game?
Well, I think
what are we doing?
There are three things driving this market, in my opinion, have been for the last 6 months. One of them is very strong corporate earnings, particularly in the tech sector, and related industries. And all of that feeds into the capital spending that's going on to build the infrastructure to support AI rollouts for the next 5 to 7 years. And then the third thing are corporate buybacks. There's going to be $1.3 trillion in corporate buybacks this year, and probably the same next year. So that's a big sort of demand push for stocks. Where the power gauge is finding less obvious opportunities are in the construction and engineering stocks, for instance, the people who are either building the power plants to feed electricity to the AI infrastructure, all the companies who are building the actual buildings and cooling them. So just as an example, is a company called Comfort Systems, the symbol is FIX. They're in the air conditioning business, basically, but they're using AI to be more sophisticated about dispersing cooling. There's a company that we took a big profit in recently that goes back 50 years, Amphenol. You probably remember it from the 70s. Yep. APH, they make connectors. Well, where are the connectors used? They're used when you build data centers. So we're looking at that sort of portion of the market. There are some real estate companies, and there's one that we're going to recommend, I think, shortly, that are very profitable in selling properties to people who are building data centers and in acquiring land and getting the zoning permits. So I think AI disperses through the economy in a variety of ways, and construction and engineering is clearly one of the spots where the power gauge has really zeroed in over the last 6 months. Also nuclear. No matter how you slice it, and particularly in an administration that's anti-wind and anti-solar, where else are you going to go but nuclear or natural gas? And I think nuclear is a really interesting investment opportunity over the next 5 years.
Yeah, nuclear. I've liked that one for some time now, and it's been a winner.
Didn't you have uranium in one of? Didn't you have uranium in one of your portfolios?
Oh yeah. Yeah, we've got a nice return on I shouldn't mention it because people pay extra to get that portfolio in extreme value, but yes, we're doing pretty well with that. We've got a couple of uranium stocks. We do have UEC is for all the rest of the subscribers, and that's a double. That's been if it's I mean I think we recommended it 5 or 6, and it's 12. So we in less than a year. I mean, so it's screaming. That sector is doing great. Also, you mentioned FIX, Comfort Systems. That's one of the aforementioned cash gushers that we like in extreme value. So, yeah.
I know. Do you know how many times consecutively they've raised their dividend? It's amazing. And before this whole AI construction boom, I think nobody except my wife Sandy had ever zeroed in on the stock, but because of the power gauge, she found it.
Yeah, that's cool. I like the fact that the power gauge found a stock that, I mean, I can't even remember when we first covered it. It's been like years. It's been since, like people in our company have like come and gone, and I mean, it's been years since we
Right.
found that one, and it's had a pretty good run here. I'm happy to hear that's
But you
getting.
can't be in. I'm sorry, you can't be indiscriminate. I mean, Fix has really continued to move up. A company like Lennox, LII, has sort of maxed out. It's in our 2025 year-end portfolio, much more obvious air conditioning play,
Mhm.
but also involved with home construction. So Fix is more attuned to this AI build out, which I think is great.
Yeah. All right. So I'm glad to
Yeah,
hear.
I love when multiple editors and people that know what they're doing land on the same stock for totally different reasons,
Yep.
almost.
Yeah,
And as a reader or subscriber, I don't really care why. Like it's okay if
exactly.
that happens and all those things align. I always tell subscribers is like when 3 different people or 4 different people end up on the same stock. Like that's a great thing. I'd
Yeah.
say you should pay attention to that.
Well, that Corey, that might be too much of a good thing. There's an old expression in the corporate
Okay.
world: if you've got 3 people in a conference room and they all agree, you've got one too many
Yeah.
people in the conference room. So, I,
Okay.
but
That's why you are
I
much
agree.
wiser
If
than
if
me.
they're
So, yeah.
coming from if they're coming from different places, I absolutely agree with you.
Yeah.
I guess
You
what I'm
took the
trying to
words out of my mouth.
discourage is I guess what I'm trying to discourage is I know we've talked to Chaikin subscribers at the Stansberry conference over the years, and they say, I run all of the picks through Dan Ferris's thinking, through the altimeter, from altimetry through the power gauge and the Stansberry score. And I said, uh-uh. You're going to have analysis paralysis.
Yeah.
Zero in on the 1 or 2 people that you really believe in and
Yeah.
methodologies, and leave it at that, because otherwise you'll be sitting there looking for the perfect situation, and there's no perfect in Wall Street, as we know.
Yeah, I recently had reason to revisit Marty Zweig's list, and you can't know everything. That's one of the rules. You can't know everything,
Yeah.
and if
Well,
you try
Marty
to do that,
Zweig.
where I thought you were headed with that, Mark, is that you try to do that, and if you look for consensus in the market, the idea might be overdone. You might be the
Oh,
last
yeah.
one
That's
there.
exactly.
You
I
know.
was trying to dredge up the word
Yeah,
consensus,
and
and I
the
missed.
power gauge tips your hand early, right? It's like the power gauge is like your early peek at the stock. It's before other people are clued into it, which is nice, right?
Well, the power gauge really has 3 factors that have to do with what the analysts are doing and saying about the stocks they cover and how companies report vis-a-vis the analysts. So 3 of the 20 factors really give you an inside look into what the smartest people on Wall Street are saying. So if analysts are raising their estimates, as they are with Fix, and they're raising their price targets, and then a company reports better than expected earnings, that's sort of a triple play, and that kind of consensus I like. When a company raises guidance, beats earnings, and beats sales estimates, those are the stocks that tend to perform very well over the next 6 months.
There you go. And the power gauge is really good at finding them. I mean, it's quite
It
a
has
tool.
been, yeah. I owe that to a guy named George Douglas. I was at Drexel Burnham before the proverbial S hit the fan, and George had a quant database. There were only 2 on Wall Street at the time. Morgan Stanley had one, and George had one at Drexel. And he did the pioneering work in earnings surprise and earnings estimate revision. And he's still managing $5 billion on the West Coast today. So, I learned at the foot of the master how important it is when analysts are moving away from the pack.
Mm-hmm.
And that's really important. And the power gauge is geared to find those stocks.
And you're talking about before the stuff hit the fan with, the junk bond thing during the '80s, right?
Yes.
Okay.
Yeah, I was there from 82 to 87. I got out in September of 87. Pure luck.
September of
Sold my
87.
Drexel.
No kidding. What an
Well,
exit.
I started my own brokerage firm, and I had been buying Drexel stock with loans from Chase Manhattan. Funny. Uh, so I wasn't putting up but 20% of the cash. And I informed the management that I was leaving, and they said, "Oh, it's sorry to see you go, but you're going to have to sell your stock." And I said, "Well, why?" They said, "Well, that's the rule. You leave the company and you have to sell it back." I got the absolute high tick on Drexel. It was privately held on Drexel stock. And, then October of 87 came, and
Wow.
the rest is history.
Wow.
But so sometimes it's better to be lucky than good.
Yeah.
Yes.
Well
Anecdotes.
done.
Well,
If
I
anybody
was just listening to this new book that came out from John Malone, his memoir, and so far it's really good. I'm only a couple chapters in, and he brings up part of how they were able to get started was the junk bonds from Drexel Burnham.
it was
early on, which will help fuel the whole beginning of his cable empire. So
exactly.
I thought of you because I knew you were at Drexel Burnham.
Those Liberty stocks aren't doing very well, are they, Corey?
No.
The various Liberty holding companies. I mean, they own a lot of interesting properties, but somehow I don't think Wall Street gets it.
Yeah. It's funny because I hear them pitched constantly, all the different ones at like value events and various events. And then I go back and look a year or two later and I'm like, oh well, didn't, that fizzled.
Glad I missed.
Yeah.
Well, something like Charter Communications, which is, second largest cable company in the country, is just in a downtrend for 2 years. Cord cutting and cost cutting.
Yeah.
Cable is and will be in a very difficult spot.
Yes, but the thing I wanted to ask you about was AI. Well, you brought it up a little bit already. I think last time you were here, we talked about like the similarities to the buildup of the dot-com bubble, and how I forgot what year you said we might have been in, like 95 or 96.
96, yep.
96. Okay.
So
what year are we in
97?
Now? Because
we're in 97.
We're in 97. Okay.
But be mindful that there was a huge drop in October of 97, and then another, I think it was the Thai baht crisis or long-term capital management in October of 98. So the road to new highs in the NASDAQ back then was not straight up, but there was a lot more to go. And I think there's a lot more to go this time.
I occasionally tell the story of standing on the corner of St. Paul Street and I forget the cross street there. It's where that one building that Steve Sugarwood and Porter Stansberry and I worked in together on August 31st during the LTCM crisis, and listening to Steve basically school us and tell us, the Fed's going to intervene and they're going to save this, and this is going to be a great bottom, and the market's going to soar after this. And of course, that's exactly what happened.
It did.
I will never forget it. Steve taught me a lot that day about
John Merriweather did us all a favor ultimately. Yeah.
Yeah, that's right.
So 97.
Yeah.
We're in 97. As we're speaking on this day, we're speaking. Oracle shares are up 40% in one day, intraday right now. Like,
no kidding.
Can we talk about history repeating or rhyming? Like what?
Yeah. Well, did you see the projections from Larry Ellison? They're doing, I think, 14 billion in data center revenues, and he's saying over the next 3 years, 120 billion in data center revenues. I mean, that's, it's amazing.
It is.
That's what spurred the. By the way, the power gauge had been bullish. It was neutral heading into the earnings report, but one of our technical indicators in Chaikin Analytics gave what we call a relative strength buy signal on Oracle 2 days ago.
Wow.
Now,
Nice.
we didn't pick up on it for subscribers because the power gauge had turned neutral, but the technicals were beautifully set up for a good earnings reaction. And
I assume he's talking about software revenues for Oracle, which is great. Of course.
No, he's talking about data center revenues. The stuff that Microsoft and Amazon with AWS.
Yeah. Well, then he's crazy
is
in
really
my opinion. Yeah, he's crazy in my opinion.
Yeah.
The one thing we learned from the .com boom was that internet usage went up 1,000-fold, and the telecom services revenues were cut in half from over 20 years.
Yeah.
So
I mean, it's a mini bubble in the making, no doubt about it. But I think there's more there than there was in 2000. There aren't that many pets.com. Yeah, there aren't that many pets.com around, or Exodus, which hosted the data centers.
That's right.
Meg Whitman, Exodus.
Yeah, and the folks building them aren't like debt-fueled cash burners. They're debt-fueled. They're actually the big hyperscalers are in a negative net cash position, but just barely, and they're loaded with cash.
Yeah.
And their core businesses gush cash. I mean, they're just like the most cash-gushing businesses on the face of the earth.
Yeah.
So they're not. There's going to be no WorldComs here, right?
No. Well, there'll be one, but we don't know which one it is.
Right. That's right.
Yeah.
Same page.
Yeah, I feel like from this point forward, we gotta just keep an eye. I mean, you should already, but shouldn't we be keeping an eye out for all these, for the bad .com examples?
I agree with you. We've developed an earnings quality score. My associate Joe Austin, who's got 40 years of experience analyzing tech stocks and actually running the short book of a hedge fund, and I have developed an earnings quality score for his new breakthrough investor. And it basically looks at accruals and it looks at cash conversion. And that's a pretty simple way to see who's real and who's not. You won't catch all of the fraudsters, but if companies are booking sales but they're not converting that to cash, then there's a red flag right there. I agree with you. You've got to, if you're going to participate in AI going forward, you have to have some way of testing the balance sheet and the income statement to make sure there's no funny business going on.
Yeah, it's you, Mark, are one of the folks who has impressed upon me that you got to have the full package, right? It's fundamentals, it's technicals, it's quantitative, it's whatever else, a little dash of behavioral finance here and there, whatever it is. You got to have all the pieces to do it right, to be a trader and to make these kind of calls that you're making on, like a 6-month basis.
I've always said that fundamentals drive the market, but technicals drive the market to extremes. And that we're seeing that in Oracle this morning. And because of that, we're going to be recommending that our one newsletter, which is trading oriented, that people take some profits, because the spike has sort of dragged along a lot of tech stocks that had been lagging a bit in the last 4 weeks, because clearly tech was being sold over the last 4 weeks. A lot of the component stocks like AMD, NVIDIA, Micron, and so forth were lagging. And this announcement from Oracle has pulled them all up.
Mark, what do you make of the fact that gold has outperformed so much of the stock market this year?
10th month in a row that China has added to their gold reserves because they don't want to be dependent on the dollar as their reserve currency. There's no other explanation in my mind for that.
Yeah, I sent the chart around recently about showing that the value of gold eclipsing the value of foreign treasury holdings.
That's what it's all about. Until people have confidence that the rule of law is and contracts are going to be adhered to in the U.S., the dollar is going to be under pressure, and gold's going to be bought by the central banks around the world.
Own gold, among other things. How about gold equities? They've actually had a nice run here too. Have you seen signals from
We
those on the power
have,
gauge
and
as well?
we debated even, doing a special section of one of our newsletters for metal and mining stocks, but we passed on that just because, uh, gold is so much of a political statement right now for the central banks around the world. So the power gauge, if someone's a power gauge subscriber and they can find these metal and mining stocks all on their own. As with you, Dan, I like to stay in my comfort zone. Like I've never made money on a biotech stock. If one of our editors recommends a biotech stock,
Yeah.
I'll be surprised. I'm always late to the party or miss the move. So you've got to stick in investing in general. I'm not talking about trading, but investing in general, you've got to stick to your knitting and you've got to know something about the space that you're focusing on. So tech, I really know.
Yeah.
Consumer discretionary, I think I know. Some, entertainment stocks, but metals and mining's just never been my thing. So even when the power gauge is leading us there, it's not going to be my first choice for terms of a recommendation. But that doesn't mean that a power gauge subscriber, Chaikin Analytics subscriber, can't do this on their own. It's really simple.
Right. They can use your tools. That's the cool thing about it.
Yeah, we have the discovery engine. You just put in a stock that has a bullish rating. I'm going to click on my screen here and tell you one so we give the viewers something of value. And then it'll find stocks like that. So if I go into metals and mining, is this fair game while we're on the air?
Sure, man. This is great. Yeah.
Okay.
Let's have a little live
Yeah.
action.
So, I mean, metals and mining, actually, XME has a bullish rating for the ETF itself and the power gauge.
Mm-hmm.
And there's stocks like CMC with a bullish rating. Royal RGLD. So let's just take RGLD, Royal Gold, which is making a double top here at 190. And see, I'm putting this symbol into our discovery engine.
Okay.
And now I'm getting 5 stocks like Royal Gold with bullish ratings. So Agnico, Eagle Mines, Alamos Gold, Anglo Gold, Barrick Mining, and B2 Gold Corp, BTG. So all of them have bullish ratings. And that's how easy it is in the power gauge. As I said a few minutes ago, I really don't know a lot about this space in the market, but you don't need to if you have an opinion. So if anybody wanted to find gold stocks with bullish ratings, there they are. And those are not in the ETF, by the way. I think Barrick might be, but
probably, yeah.
So the power gauge enables you to move outside of the conventional space as defined by, say, an S&P industry group ETF.
Very cool. Thanks for that. That's great. We could probably sit here and do this all day, and people would love it, man.
You're absolutely right.
But yeah, we have recommended. We've had a great run so far on Royal Gold in extreme value because we love royalty companies. That's a wonderful, just cash gushing business model. In fact, it's just about the only place most regular non-mining specialist investors should invest in when they want to go with that sector. I
agree.
There's
another royalty company that we were looking at, and I don't have the name at the tip of my tongue.
Wheaton, Wheaton Precious is a big one. Franco-Nevada is the big one.
I think it was Franco-Nevada.
Yeah. Yeah, that Franco-Nevada is the one that taught the world to love royalties. And they started with gold royalties, and now they've got energy and everything else. And they have royalties and streams because it's so large.
Let's follow up on that exercise we just did. I just typed Fix Comfort Systems into the discovery engine. And the first 5 stocks that come up are ACA, Arcosa, ACOM, which is in one of our portfolios, ACM, construction engineering company, Acuity, which is a lighting company
I see.
worldwide,
I
Cummins
don't know.
Engine, and
I don't know
Dicom,
Arcosa
DY.
either.
So these these are names that I would venture to say your subscribers and your viewers just don't even know. And before the Discovery Engine, I wouldn't have known about it either. Another company on there is EME, MCore Group, which is building stuff. So there's a lot of names outside the NVIDIAs, the AMDs of the world, and the Palantirs that are participating in the AI build out. And I think that's going to go on for a good 5 years, assuming we don't get a total, event that washes AI off the map. But I don't think that's going to happen, but you never know.
No. And who would it surprise if it ended up exactly like the internet? And a bunch of the, we got a bear market which washed out a bunch of the garbage, and then all the stuff at the edge of the network, like Amazon and Google and Meta and all that stuff roared. There will be, they'll participate probably in AI too, but there will be others at the edge, right? That we have a decent enough model for how this could go. And that wouldn't
I
surprise me at
agree.
all.
And
There will be trillions of value
nope.
created. We just don't know exactly who's going to do it yet. Right? We don't know who
Well,
the Amazon is.
here's what your viewers should know, that in 2001 and 2002, small cap value stocks soared while the internet bubble was bursting.
Oh, yeah.
When the Ciscos of the world were going down 90%,
Oh, yeah.
Chuck Royce's small cap value fund just skyrocketed and the power gauge picked up on those names.
Excellent. Yeah, that was a great moment for value. That was probably the last great moment for it. That was when you had to buy all the banks and home builders and Berkshire Hathaway and all the rest of it. In fact, because they were all underperforming, and then during the boom, everybody found them. And of course, some of those, the banks and home builders, a few years later had a little problem, but up until then they roared, as did mining
Absolutely.
stocks. Yeah. Yep. It was a good moment for value. Great moment.
Well, mining stocks, you can go back to 1973 to the bear market of 73.4, and gold stocks were fabulous.
Oh, yeah. Well, yeah.
And that was a 2-year bear market. It went down 53%.
Yeah. Yeah. The 70s were like, they're practically the golden age, I'm still hearing stories from, the older folks who participated in that. And, folks who are brokers are always tell me things like, toward the end, like 1978, 79, 80, there, people would call us up with, we'd know nothing more than a ticker symbol, and the stock would roar 100% in a week, or it was crazy. Yeah. We're not there yet. we could get there with some of the stuff. I fully believe that the small cap mining stocks, they always get to that moment. We're nowhere near there yet. But they're having a nice moment here. I own a bunch of them myself, and they're making me very happy. I'm a very happy small cap mining stock owner right now.
There you go.
Yeah. And as you point out, the power gauge is finding some great mining stocks. All those are, in fact, you mentioned like Agnico Eagle was one. I mean, that's one of the highest quality mining companies on the face of the earth, and it doesn't surprise me at all that you're finding that. And Alamos, another great one. So
yeah,
great list.
Well, you mentioned Marty Zweig, who was a really good friend of mine. I don't throw those terms around lightly, but Marty and I spent many mornings at the beach together while he was writing his market letter. And Marty used to say, I can tell you what, but I don't always know why. And that feeds into your comment from Marty that you can't know everything. Yeah. But knowing what is really important, what to buy.
Marty's basically, other people like the turtle traders did teach us some of this, but he's really, to me, the guy who taught us about, don't fight the tape, don't fight the Fed,
right?
Cut your losses short, let your profits run. All those like trading commandments that every single trader we've ever interviewed has confirmed. Like I'm talking about every single one. We always wind up there where Marty Zweig was in the 80s and 90s, right? still to this day,
Well,
those are the commandments.
Bulletin Dan, Marty Zweig started in the newsletter business.
Oh yeah, I'm aware. Yeah.
Out of Wharton.
Yep.
Out of Wharton. Yeah. I mean, he and his wife, she did the mailing, put the stamp on the letter and sent it out. And that's how his business began.
Yeah. I have Marty Zweig a bit on the brain right now because I just wrote a Stansberry digest this past Friday about him. So I had my head in the rules and in some of his history and the book Winning on Wall Street and all of it. So
yeah. Really super
really cool
guy.
to know about.
His list of 17 rules. That's I printed out at one point. It might have been after talking to you, Mark, about. I mean, you might have mentioned it, and I printed it out. It's an old typewriter font, and they all still apply. All the lessons still apply.
Yeah.
Today, I think.
I mean,
so, yeah.
Because human nature hasn't changed, and psychology is a big factor in the market, whether it's momentum or herd or analysts following one another. The basic rules still work. Now, I'd rather follow Marty's basic rules than Benjamin Graham or Warren Buffett's basic rules, because that requires staying power of a lifetime and access to a lot of cheap capital in an insurance company. But Marty Zweig is for real investors.
Cheap capital and leverage. Few people ever talk about the leverage in it's, over time it's been about 1.6x for Buffett. And that made a difference too. He had a special situation there. And of course he's a genius, so he exploited it to the maximum, and the rest is history. But yeah, other things are happening there besides just being a good stock picker. So let's see, where are we here? We've got all kinds of good ideas. We've got a list of gold stocks. We've got names that the Discovery Engine is telling us about that, frankly, a couple of them I never heard of, which I'm surprised at this point. I thought I've heard the name
of everything,
of every big cap.
Well,
stock.
check out a stock like DICOM, DY. It's not on any of our lists right now, but it recently made a new high up around 280. It pulled back to 240. We got an oversold buy signal on it, bullish power gauge rating.
Mm-hmm.
And the Chaikin money flow, which measures smart money accumulation, has been deep mountains of green since April. So smart money has been buying stocks like this since April. Power gauge turned bullish in May at about 180. But these are the companies that people are not looking at that are going to fuel their stock prices because of the AI infrastructure build out. And one of the things that's interesting to me about the market is that this leg of the bull market has been fueled by capital spending, not by consumers.
Yes.
And I think that's a big deal.
It is a big deal because they're building something real. They're building something.
Well, it also does something for the income statements, Dan. Think about this, and it may be a little bit in the weeds, but Microsoft buys chips from NVIDIA. NVIDIA books it as revenue, as they should. Microsoft books it as a capital expense, writes it off. That's a virtuous circle that's going to go on for quite a while until it doesn't. But and that helps fuel stock prices.
I will stick with my initial. It's real, is what we're saying. It's not.
It is.
When things get to be a bubble, there's leverage and excess liquidity, and there are, however you might define liquidity, it's a nebulous, nearly meaningless term most of the time. But it, there are issues there when you get to a true overinflated bubble. But as has often been pointed out by people like, George Soros and Templeton and all these other people over the years, like the bubble has roots in reality. Right. And you're describing the reality, the income statement.
Well, the head strategist at Bank of America this morning said there's what we all know, $7.2 trillion in money market funds, and that's enough to fuel rallies for a long time as long as the fundamentals hold up.
Right.
I think 2 trillion of that is individuals and 5 trillion is corporate.
Yeah. I'm always a little leery of cash on the sidelines arguments, but the point is that there's plenty of capital to be allocated, and that is certainly true. And
well, to me, when I read that, it was oops. They may be ringing a bell here on a short-term top.
Yeah.
When Merrill Lynch, Bank of America, is talking about the reason to be bullish is because of the money in money market funds. Well, that same money was there in April.
Yeah.
When the market dropped like a stone. So if to me it was a red flag.
And most of it was there before when it's a troublesome argument to me, but as you say, it does seem to have some value as it's something to know. It's something to think about. I think maybe you don't trade it, you don't really do anything with it, but it's an interesting data point. It's worth talking about for 5 minutes every time it comes up, I think.
I'm as interested in the $350 billion that money generates at 5%.
Yeah.
Well, 5 is probably going to be 4 very soon, but
yeah.
That's $350 billion that could easily go into stocks.
Sure. Oh yeah.
Or, consumer discretionary spending, which we haven't seen yet.
Yep. It was a couple of years ago when I noticed that, wow, T-bills are back. T-bills are 5% again, and I told people at our conference, investing is back, right? Because when interest rates are zero, we're all speculating, no matter what we think we're doing, in my humble opinion. And
I couldn't agree more.
Yeah, and investing is back, right? When you've got this anchor in your portfolio cranking out even 4%, I think is still a decent number. You're saying, show me, and of course the power gauge does that, right? Marc Zweig is the ultimate, yes, I'll show you guy.
Just tell me. But, one other thing to note, and it's been a bullish factor, is that millennials own stocks. They don't own houses, they rent. They don't believe in banks, checking accounts. They buy stocks, which is, one of the reasons Robinhood has been so strong as a stock. I think it's more crypto related but millennials own a bigger percentage, have a bigger percentage of their assets in stocks than they've ever had. And
interesting.
They don't really believe in fundamentals.
To keep up with inflation.
I think, and it's it's fun for them. They know these companies, but they're not value investors, that's for sure, and that's part of the reason that there's so much consternation, from old-time analysts like you and me about valuations. These millennials don't care. They absolutely don't care about valuations. That's based on surveys, not a guess.
Well, look, Marc, you and I both know at this point where valuations are, a whole lot of people don't care about them. So what you're telling me is absolutely has to be true. By definition, it's true if they're buying, right? So, yeah, all day long they don't care about valuations.
Yeah, I mean they're stretched clearly for the mega cap stocks, but you drop down to the other 400 stocks in the S&P, and they're pretty reasonable.
There are some deals.
The question is, where are the earnings being generated?
Right. And you are, I won't say uniquely suited to tell us that, but certainly well suited, well equipped to be able to tell us that. And you're in the
you're
business
very kind.
of
I'm just the messenger. The power gauge does the heavy lifting.
I knew you'd say that. The tool is set, and you're just telling the world what it says. Well, we're getting near the time for our final question, but we're not there yet. Okay, we're not there yet, and we've covered a lot of ground here. We've got a list of stocks that really nice names in precious metals and things you never would have heard of without the discovery engine. We've addressed gold and gold stocks. we've addressed the bond market. Our friend of the show who's been on, Paul Podolsky, who used to work for Ray Dalio, likes to say, there are bonds in all your stocks, just so you know. So we've
Right.
covered that. I wonder what we haven't covered. Do you have anything coming up? Do you have is there a new presentation coming out that we need to know about? Is there anything coming up that we really need to know about? Because I know you guys, you do all kinds of things. You put out all kinds of videos and presentations and things, and I just want to make sure I cover this base with you.
We have 2 new products coming out in 2026, and we'll have our year-end or the 2026 portfolio of 10 stocks coming up in late December or early January. But right now, we're just trying to find what you said in the beginning, stocks to buy on pullbacks for our subscribers. And one way or another, we'll get a pullback in October. I don't know why or when, but that's never failed me. So
that's great. Great. I'm glad to hear it. We could use a little breather to sort of reload the gun and fire off a couple more shots here.
Yep. And I'll see you at the Stansberry conference in Las Vegas in October.
We'll all be there, man. We'll all be there. October, I think it's like 21st and 22nd, maybe, if I'm right.
Yep. Yeah.
And that will be a pleasure, as it always is. And if I don't even know if you can still get tickets to attend in person, but if you can, you could probably just Google Stansberry Conference 2025 Las Vegas, and it'll take you right to it. And
it's a great array of speakers. I know. Yeah,
absolutely. I mean, we get all kinds of folks. I mean, we've had Michael Lewis, and last year we had Michael Lewis and Billy Bean, who Lewis wrote the book Moneyball about. It's people like that, heavy hitters. I made fast friends with former Governor Rick Perry from Texas. All kinds of folks. We had a woman who was a CIA specialist in disguises, and she was telling us about how she sat next to her colleagues at lunch. I mean, in disguise, and they didn't know it was her.
I couldn't make it last year because my wife came back from London and gave me the flu, so I had to cancel. One year I got, when the conference was in Boston, I got to know a guy named William Cohen, who was an investment banker with Lazard and Lehman Brothers. And he writes for a group called Puck News, that's, sort of online magazine. And I will typically comment on an article he's written on a Sunday, and I'll get a reply right back. And he's a smart guy about what's going on Wall Street. Wrote that book about General Electric, among others.
Yeah, I interviewed him about that. I've read a couple. I read the Lazard book. He's a fantastic writer. I mean, he is a brilliant historian. If you never read a William Cohen book, Cohan, by the way, I envy you the what you're about to discover.
Yeah.
Really
great writer, great reporter.
Yeah.
Yeah. He wrote a book about
really good.
The Duke lacrosse case about probably 15 years ago.
Yeah.
That I read. But through just connections, a lot of Wall Street connections there, obviously, too. So
Yep. And a book about another one called Four Friends, about it's got JFK Jr. and 3 other guys that he knew, all 4 of them. Really, I'm glad you brought up William Cohen. Thank you for that, Mark. Yeah. All right.
You ought to subscribe to Puck. I find these internet magazines fascinating. I get 2, Puck, and then Graydon Carter, who used to be the editor of Vanity Fair, is a little more entertainment oriented, has one called Airmail. And they cost about $50 a year to subscribe. And I find these very informative, particularly Puck, because they have a lot of writers either talking about entertainment stocks, or in the case of William Cohen, deals. And I think this is, by the way, I think this is the way people are getting their news.
Yeah.
It's the way I get that sort of inside story that you're not going to see in the Wall Street Journal or in the Financial Times.
Well,
Although
Mark,
sometimes William Cohen's right for the Financial Times.
yeah,
So.
yeah, he is. Knowing that you read Puck and that Cohen's in it, I'm sitting here clicking on it on how to subscribe, and it's like it's going to be like $100 for a year. It's nothing. So.
Oh, you should be able to get a discounted price there.
Oh, okay.
But
Awesome.
this is keeping journalists healthy.
Oh, we desperately need that. I want to tell you, I heard a quote the other day. It was so spot on, unfortunately. It was a guy who said, journalism is about covering the story with a pillow until it stops moving. And unfortunately, that's too right too often. But a guy
Love
like
it.
Cohen, he gets in, he finds the real story, he digs it out.
It's very hard. Yes.
Yeah, particularly if you're interested in entertainment stocks. I mean, he's right on top of Warner. All the Discovery complex and the various machinations that go on there. The Comcast spinoff. He's really wired into what's going on and what's likely to happen from an investment point of view.
Smart guy. Well,
Yep.
I think we sold enough Puck subscriptions for now. Let's deal with our final question, which is the same for every guest, no matter what the topic. And if you have already said it, Mark, by all means, feel free to repeat it. The question is simple. It's for our listeners' benefit. If you could give them a single takeaway, a single thought today, what would you like it to be?
Never bet against the stock market because you think the world's coming to an end, because it only happens once.
Brilliant. Brilliant. Thank you for that. That is brilliant, and it's perfectly true. Well, thanks for that, and thanks for coming around, Mark. It's always a great pleasure to talk with you. We always have a lively conversation. Thank you very much for that.
Enjoyed it a lot, Corey. Thank you. See you guys in Las Vegas.
Yeah, see you in Vegas.
See ya.
Looking forward to it.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.